and welcome to yet another episode of the In series. We are going to cover today how RBI has hiked key policy rate, that we are of course referring to repo rates. We will talk all about the important terminologies that is generally used in financial terms, and of course from the perspective of GS Mains paper 3rd as well as from the perspective of your preliminary examination, it is important that you pay thorough attention. So these are the many topics that we are going to discuss step by step from the news. What is RBI's Monetary Policy Committee? What does it do basically? The recent decision of hiking the repo rate, was it unanimous or not? The impacts, why did the MPC raise the rate and how they have moved in recent cycles as well. How has the rate transmission progressed and what is RBI's growth and inflation forecast? We will talk about that as well. And a prelims question in the last. So the Monetary Policy Committee has hiked the key policy rate, the repo rate, by 35 basis points to 6.25%. Now, what are basis points? This is basically a unit to measure, and this is generally used in the financial sector in order to show how the value of anything, any financial instrument is doing. Is it increasing or decreasing? So it's like that with the basis points. And MPC has also lowered its growth forecast to 6.8% from earlier 7% because the current financial situation is not looking very bright. The grim situation that has engulfed the entire globe, specifically, you can see these are the ill impacts of globalization, that whenever recession or some sort of grim picture is painted in one country, it gets transported to another country. Although it has retained its retail inflation forecast at 6.7%. Moving ahead, first of all, let us talk about MPC, Monetary Policy Committee. The Monetary Policy Committee has its origin under Section 45ZB of the amended RBI Act of 1934, which was amended in the year 2016. According to this section, the central government, remember, the central government is empowered to constitute a 6-member Monetary Policy Committee. What does this Monetary Policy Committee do? It basically determines the policy rate which is required to achieve the inflation target, which is ideally 4%, but plus minus 2% is there. That means 4% is the ideal rate at which proper growth could be achieved according to RBI if inflation is pegged at 4%. But the range can go from minus 2, that is 2%, to plus 2, that is 6%. Okay, so this is the range, and it wants to, MPC wants to ensure that we stay in this particular range only, and it can use many tools from hiking the repo rate to lowering the repo rate in order to manage liquidity. That is their concern, and whatever decisions it takes, it is binding on the bank. Remember that. Also, if we talk about the composition, 6 members are there. RBI governor is the ex officio chairperson, deputy governor is the in charge of monetary policy, and an officer of the bank is to be nominated by the central board. Apart from that, the central government maintains its presence in the board, in the committee, by having 3 persons to be appointed in it. Now, they cannot pick any 3 persons. They have to pick the persons from this particular category. They should be a person of ability, integrity and standing, having knowledge and experience in the field of economics or banking or finance or monetary policy. Okay, remember this. Moving ahead to the next part, was the decision unanimous? See, decisions in RBI's Monetary Policy Committee are taken by majority. And the hike in the repo rate, what is repo rate? Repo rate is the rate at which the commercial banks borrow money from the RBI. Okay, or we can also put it in a way that it is the rate at which the central bank or the RBI lends money to the commercial banks. When this is hiked, what happens? I am a commercial bank. Suppose my name is Bank P and I want to take money from RBI. If RBI has lowered the repo rate, that means it becomes cheaper for me to take the loan because I have to pay less amount of interest. But if RBI has hiked the interest rate, it becomes costly for me to get the loan because I will have to pay a higher interest rate. Now, here RBI has hiked the repo rate. So I might not borrow from the RBI. Then I will also likewise not have enough money with me now because I haven't borrowed from the RBI. Then I cannot give easy loans to people who are needing it. That means I will also raise my interest rate on loans, right? So this is how a repo rate is managed, or it is hiked or lowered in order to manage liquidity in the sector, in the market. Okay, and this hike is fifth since May 2022. That means the expansive policy, the you can say accommodative policy or the money boosting policy of the RBI is not there. Okay, and this is the majority decision of the 6-member MPC. 5 members have recommended this increase. MPC has also decided by a majority of 4 out of 6 members to remain focused on withdrawal of accommodation. Accommodative policy is a policy through which the banks want to boost or expand money supply in the market, which is not happening right now, because if there is going to be a lot of money in the market and supply is not getting met because of lack of investment, inflation will increase, and that is the concern. Inflation has to be targeted, it has to be lowered. So the impact could be, of course, lending rates of banks are expected to go up because I do not have now enough money with me. As RBI has increased the repo rate, I cannot borrow easily from the RBI. Then I have less money to lend it to other people, and that is why interest rate will go up. EMIs on vehicles, homes and personal loan will also rise. That means there is not a very healthy sentiment. Purchasing durables right now is not a good option. Home loans, you cannot avail it at a cheaper rate. That means real estate market is also going to go down a little bit. The external benchmark linked rate. This is basically what the banks have anchored the rates to the repo rate. When repo rate is rising up, the EBLR will also rise up. Okay. 1 basis point is 1/100th of a percentage point. Remember this. And this is as such loans are linked to the repo rate. Okay, EBLRs are linked to the repo rate. So as much as 43.6% of the total loans are now linked to the repo rate. That means, of course, repo rate has increased now. Interest rates will also increase. Now, marginal cost of funds-based lending rates are also expected to move up. These are the lending rates below which the banks are not permitted to lend. Okay, so of course, this will also go up because it is almost linked to the hikes. The hike will help in moderating inflation in the country. This is what RBI wants to achieve. And 49.2% of the total loans portfolio of the banks are made up of marginal cost of funds based lending, which came into existence, as I told you, in 2016. Deposit rates are also expected to rise in the near future. Why? Because if a bank is raising its deposit rates, more and more people will try to park their surplus money with the bank. That means the banks will take up all the liquidity now, and there is less money in circulation, and then we see inflation getting targeted and moderated. Moving ahead, now why did the MPC do so? Of course, to bring down the inflation, because inflation, although in October eased to 6.77%, but what does MPC want to do? To keep the inflation within the range of 2 to 6%, right? So it is well above the RBI's comfort level. The problem is rise in core inflation. Core inflation is basically indexing the rise in the prices of goods and commodities and services minus food and minus petrol. So if we we can take into consideration, if we are subtracting food and fuel prices, yet we are seeing that other goods and commodities and services prices are increasing. So that's not healthy. Household inflation is expected to remain high. And of course, weakness in the rupee against the US dollar is adding to the inflationary concerns. We also talked about US Federal raising the rates. Okay. So how has the interest rates moved? It's not very important, very database, just go through it once. See, rates have been raised by a cumulative of 225 BPS since the start of the tightening of the monetary policy in April 2022. RBI already intervened to support the rupee, and further rate rises are likely to support the currency. Analysts are saying that the central bank will raise the rate to 6.50% by February 2023 and then hold this rate throughout the rest of the 2023. This is what they are thinking. If the retail inflation cools down, then the RBI is likely to pause the rates. Moving ahead now, let's talk about weighted average lending rates. This is of course the minimum amount of lending rate that a bank can intervene with. The weighted average lending rates on fresh and outstanding rupee loan, they have increased by 117 BPS and 63 BPS. That was from May to October 2022. On the deposit side, the weighted deposit average domestic term deposit rate on fresh and outstanding deposit has also increased during the same period. Alright. And what is the RBI's growth, inflation and inflation forecast? As I've already told you that the maintenance of the inflation should be, retail inflation should be at 4%, but -2 +2 can be there. The rate setting panel has lowered the GDP for fiscal 2022-23 because sentiment is not very happy. Also, this is 6.8% from earlier 7%. MPC has retained the inflation projection at 6.7% for fiscal year 2022-23. Still, it is very high. Moving ahead now, let's talk about the question. Which of the following statements is or are correct regarding the Monetary Policy Committee? It decides the RBI's benchmark interest rates. It is a 12-member body including the governor of RBI and is reconstituted every year. It functions under the chairmanship of the Union Finance Minister. Let me take the names of those who have answered my last question correctly. Sagarika, Krishna, Rahul, Praful, Nishant, Faizan, Puneet, Squad, Aarti, Anuruddh, Alavarenga, Puneet, Rehan, Tushita, Anshika, Soumya, Bhargavi, Priyanka, Pallavi, Rupal, Richa, Tushar, Aditya and Anuj Singh. You all have answered it correctly. And please answer this question as well so that I can mention you again in the next segment. Thank you so much for watching.